Hi, my name is John Santilli from Rehab Financial, and welcome to another market update. Today we'll be covering the market update from last quarter into the beginning part of next year. First up, let's talk about third quarter. Third quarter was a tough one for all of us. It was some unstable roads. We looked at the Fed really pushing hard to get inflation under control with continual rising interest rates. While unemployment is still looking very solid in the marketplace, the reality is that in the investor market, the real estate investment market, we have seen a lot of changes over this last quarter. Where we are right now is actually unfamiliar territory for many. Since the beginning of the year, interest rates have almost doubled. The fact is that a $300,000 loan has increased by $500 per month in monthly payment. We're seeing it everywhere. Fuel cost, material cost is still an issue. Lumber's coming back, but it's still very difficult and the costs are still very difficult to manage. Builders and contractors are feeling all of these different pressures. The average real estate investor has to be more careful than they ever have been. What we have experienced over these last few months is that the markets are all different changing. The capital markets are changing. As a result of higher interest rates, all right, the availability of product is still there, but now it's more costly. Renters are still looking for homes to rent. Buyers are still out there for looking for houses to buy. The market is still short by 3.8 million houses in availability. The baby boomers are not the ones buying houses. 25 to 35-year-olds are the ones that are buying houses. They just can't afford a lot of the houses that are out there in the marketplace. Where are the interest rate increases felt the most? Well, it starts from the top down. $1 million plus houses, $500,000 plus houses, $300,000 houses. Rents are up, mortgage payments are up, and it's becoming less affordable for people to have homes. There's great news on the horizon for investors and home buyers alike. That this is not 2008 where we had a housing crash. People that are in delinquency or foreclosure, they have a ton of equity in those properties. That means that there's a lot of equity for you to take advantage of if you're the recipient on buying that foreclosed property. Builders have also slowed down their building to the point where they're not going to get too far ahead of the buyers in the market. There's only inventory to feed the demand of about 3.5 months, where typically that's about 6 months. Back in 2008, we had 18 months worth of inventory on the market ahead of demand. So demand is still really huge. When builders are not building houses, new houses, that old houses are being rehabbed to be sold. That's the opportunity. For the first time since the Fed has been trying to control inflation, we've seen a decline in housing prices. Mainly, we've seen a decline in housing prices on the houses that are brand new. For those that already own their home and are listing their property to earn some profit, they're holding tight. They're going to keep steadfast on the fact that they don't have to sell their property right now. They can wait for the market to shift back to more of a seller's market. And it is a seller's market. The fact is that it's simple supply and demand. We don't have enough houses listed on the market. We have plenty of demand out there. So there's still great opportunities for home flippers as well as regular buyers. Profits for the flippers in this marketplace are still very rich. The margins are still very good. The return on the investment is a little bit different because you have to put more money out in order to get your margin that you're looking for. But depending upon the market, if you're in California versus Pennsylvania versus Texas or Florida, it's all going to be different right now. Profits are still very thick. The margins are still very good. Flipping is still a very profitable venture. It's time to sharpen your pencil. Are you an investor that's going to be flipping, or are you going to be an investor that's going to be holding? During market opportunity time, it's a great time to flip. During compression time, it might be a time to hold. When you work with Rehab Financial, we can go through a profit analysis with you to try and see if it makes sense for you to try and flip that property right now. Lots of landlords are really taking advantage of the fact that you can convert properties from a single family into a multifamily and make lots of rents. Rents are in demand as much as the housing market right now. You have to move with the times. If you have plenty of cash on hand and take advantage of our no down payment loan, then you can maintain a lot of that cash in your bank account, refinance, into a 30-year mortgage. Perfect opportunity with the rental market. It's a great time to be a landlord. One of the things that we want all investors to be aware of is that in this marketplace, you have to get further upstream. In order to reap the benefits of the margins that are out there in the marketplace, the average investor that was utilizing the MLS in order to find properties, those properties are going to be really tough to make the margins that you need to be successful. You're going to have to move upstream a little bit more. Get involved with the auctions. The reality is that REO properties are just not going to be available this year. This is different times. In 2008, there was no equity in the properties. Now there is equity in the properties. So those facing foreclosure are selling properties and getting out of the foreclosure before it even becomes one. So investors, if you're looking for the opportunities, you have to move upstream. The experienced investors already know this. The new investors, you're going to have to be educated on it. The best thing that you can do for you and your business is select that partner that's going to be able to remain stable and steadfast during times like these. Those that are not dependent on outside money. Rehab Financial Group is a private money lender with all of our money in-house. That means we don't depend on third-party money. We have a fund that basically has been dedicated with our underwriting guidelines to help you, the investor. All of the decisions are made in-house. That will go up to 100% financing on the rehab, 100% on the purchase, up to 70% of the after repair value. We are definitely a relationship lender, and the more we get to know you about your business, about what your goals are, the more we will work together for us both to be successful. In closing, real estate investors, you're creating housing. The demand is huge. Take advantage of it. Call us today.